What's up everybody, Nate here. So I know what you're already thinking, Nate, is every single one of your videos going to be a cell phone video from here on out? The answer is no. I've just been really busy lately, and that does not mean that I don't keep you guys updated. So with that being said, I want to talk about all of the craziness right now that is going on in the stock market, and of course I want to talk about the Federal Reserve. We have to go over something super important and something that you have to understand about the stock market and what the Federal Reserve is doing right now. So let's get into it. So the stock market right now is tanking. Actually, it has now erased all of the gains that it has had over the last 2 years. All of your major indexes like the Dow, S&P 500, and NASDAQ are all tanking beyond belief, and part of this has to do with what the Federal Reserve said in its meeting yesterday. So if you didn't catch my last video or you missed their report, they are essentially raising their benchmark interest rates by 0.75%, the most aggressive they have gotten with inflation and their monetary policies since 1994. Now, that is a big deal for the stock market because this means that it's going to be a lot harder for businesses to get liquidity. It's going to be a whole lot harder for businesses to get debt, but that is not why the stock market is crashing right now. The stock market is actually crashing because they are not sure that the Federal Reserve is doing the right thing with inflation, and let me explain. There have been a lot of corporations and a lot of companies that have talked about what the benchmark interest rates from the Federal Reserve have been. A lot of companies have said something like a 0.75% increase. A lot of companies have also said that it should be 5% or maybe even a full percentage point. So with that in mind, the stock market was kind of prepared for a 0.75% interest rate. But then we had yesterday the press conference with Federal Reserve Chairman Jerome Powell, and he did not really seem confident that the Federal Reserve is going to be able to do anything in order to lower inflation. He basically said that the Fed is doing what it can, but inflation is being caused by a lot of other issues, and that it's going to be around for a very long time. They also said that the Fed is not trying to deliberately cause a recession, but that a recession may end up happening, a shallow one. Powell also said in the meeting that he believes that our economy is very strong, and with our economy being so strong that they can actually continue to raise interest rates super aggressively in the future. They can raise them by maybe even a full percentage point, but possibly by 75 basis points in July and at their next FOMC meeting, which is just going to restrict our economy even more. He basically said that he did not see a general crash coming for our economy. He doesn't think that there's going to be a major slowdown. Now, let's kind of get into that before we talk more about the Federal Reserve. Powell believes that there is not going to be a general slowdown across the board for a lot of industries. Now, from what I can tell, that is just not simply true for the macroeconomic trends. We have the housing market reeling right now. Buyer demand is low, and that has a lot to do with rising interest rates, but also home affordability. We also have other markets like prices. Cryptocurrency is also starting to come down throughout our economy. We have other markets like commodities, and like I said before, prices for everyday goods and services are also going way up for Americans. So what that is causing is a general slowdown for everything in our economy. We have supply chain issues, yes, and we also have a lot of those globalization issues, but at the end of the day, the things that are going to cause the biggest problem is the Federal Reserve raising interest rates because they have a direct impact on our economy right now. I mentioned in my previous video, but as the Federal Reserve raises its benchmark interest rates, well, you are immediately going to have problems with supply and demand. Americans are not going to be able to go out and get all of the same things that they could as easily as they could during 2020 and in 2021. The Consumer Sentiment Survey released by the University of Michigan shows that consumers are not willing to buy as much. That is a slowdown, and the slowdown translates to other industries like the housing market, like the cryptocurrency market, and of course the stock market. Businesses are going to take a hit because of all of this. They're not going to be able to expand as quickly because they can't take on as much debt. They don't have as much liquidity, and they don't have as much sales. All of that is equaling to a general large slowdown in our economy in 2022 and beyond. Now let's get back to the Federal Reserve. So they actually don't believe that all of this is a problem and a general slowdown in our economy because they are looking at two things. They are, one, looking at core inflation numbers in our economy. So So every single month we have the CPI report released in the United States. That is basically just a basket of all of the goods and services in our economy, and we measure how inflation is changing month over month. Are things going up in price? Are they going down? That's just an average of everything. For the headline inflation numbers, yeah, inflation is going up by around 8.6%, but also core inflation is going up, but not at a fast enough rate for the Federal Reserve to really be concerned right now. Core inflation excludes volatile industries like energy and food, and the Federal Reserve excludes those because they don't have direct control over what happens in those industries. Essentially, they believe they have more control over price stability and consumer sentiment in the other industries in the United States rather than just energy and food, because a lot of that comes from overseas. They believe that all of our supply chain issues and China lockdowns and of course the war between Russia and Ukraine is causing a lot of this inflation. So they believe that they can raise interest rates to control everything else, but all of those other issues are still happening. So they don't see a lot of the problems because they measure inflation differently. And this is what ultimately comes down and what you need to know about the Federal Reserve going forward. The Federal Reserve does not tell you the whole truth when it comes to inflation. They basically are only going to tell you what they need to in order to keep our entire economy under control for the short term. One of the biggest problems for the Federal Reserve is how they kind of use their terminology and use their language to keep the public still consuming goods and services. During the entire pandemic, they were very loose about how they considered inflation. They were very loose about how they talked about it because they didn't want to scare the entire American consumer throughout the entire pandemic. If they were to come out and say that the inflation problem is getting worse, they need to raise interest rates very aggressively, well, that would scare the consumer. That would scare businesses, so they don't want to come out and do that. They had that entire narrative all throughout the pandemic. It's transitory, it's going to go away. So they are now continuing that in 2022, saying that our economy is in a really strong place. Labor market is very strong. So they want to kind of paint that picture that everything is going well, so that way you don't get scared and stop spending money. And the other thing that you need to know is that the Federal Reserve has an obligation to keep inflation at a certain point. You see, the reason the United States prints money in the first place is because we need money as an economy to survive. You can't really grow if there's no money kind of circulating throughout your economy. That's why we're having a lot of problems with liquidity and our economy in general right now. The Federal Reserve is responsible with printing a lot of that money so the economy can grow. They like to keep inflation at around 2% overall, so they always need inflation. Their job is just to bring it from 8.6% down to around 2% in our economy today. And finally, I kind of touched on it at the beginning of this video, but the stock market is really afraid of the Federal Reserve and Federal Reserve Chairman Jerome Powell. Throughout this entire inflation problem, a lot of experts actually believe that the Federal Reserve should have gotten way more aggressive with inflation a whole lot earlier in our economy. They've been kind of talking about raising their interest rates and getting aggressive since October, maybe November or so of 2021. Now, if they started raising interest rates all the way back then they would have been able to do a whole lot less in 2022. But like the issue is they already didn't do that. So now they need to get super aggressive in 2022 in order to bring inflation down. They don't really care what happens to our economy, and that's why a lot of investors and businesses are worried about a recession. They are going to suck up so much demand in our economy that we could potentially hit a recession. We have all of these slowdown issues and all of this inflation that consumers are just going to be hit from both ends. They're not going to be able to spend because we have inflation problems, and we have a risk of stagflation in our economy because nothing is really getting made fast enough to meet up with demand. And then at the end of the day, we also have a lot of that liquidity and interest rates going up from the Federal Reserve to kind of eliminate all of the rest of demand. So people have a whole lot of money, but they can't spend it because they can't afford what products and services in our economy right now. And the stock market is worried about the Federal Reserve's constantly changing narrative through this entire pandemic and through this entire interest rate cycle. They are afraid that the Federal Reserve is going to get things wrong. They are afraid that the Federal Reserve is going to suck up demand way too quickly and raise their interest rates a whole lot faster than they need to and get way too aggressive. Or they're not going to get aggressive enough, and inflation is going to continue to be a problem for a very long time in our economy. That is going to create a whole slew of issues down the road. Like I said, further inflation problems, stagflation, supply and demand issues, you name it. All of these things are going to hit our economy because the Federal Reserve didn't do what they needed to do a whole lot earlier. They raised interest rates by the most that they have since 1994, but the biggest difference between what happened in 1994 is that Federal Reserve was very proactive in its strategy. They started raising interest rates before we had a lot of these monetary problems, but our monetary problems are simply growing every single day. We have over $20 trillion in circulation in our economy right now. Back at the beginning of 2020, we had around $3 trillion. So we have nearly tripled the amount of money in our economy, and all of that has a lot to do with the Federal Reserve. The Federal Reserve could once again change its narrative. The Federal Reserve could once again be wrong about inflation. The stock market is worried about that, and they're worried that things are only going to continue to get worse because this Federal Reserve might not be willing to do what it takes to bring down inflation, or they are now compensating for what they didn't do back in 2021. So here's exactly what you need to know about all of this and why it is so important. The Federal Reserve is going to most likely continue to change its narrative as we get a lot more data on inflation in general in our economy. They don't really know how inflation is going to change month over month, and how they raise their interest rates is going to depend on how inflation is going. If inflation continues to go up, if things escalate overseas, well, then the Fed is going to get even more aggressive. And also, the Federal Reserve is not going to tell you exactly what is going on with our economy. You kind of have to read between the lines here. You can't look at exactly what the data says. You have to realize there's a lot more going on in our economy. There are consumer trends that might not be getting reported as accurately as they could be right now. All of that needs to be considered because that is what actually drives our economy. That's spending. The Federal Reserve is going to continue to do things that benefit the United States federal government and, of course, the Federal Reserve themselves. But at the same time, they don't want to scare the average consumer. The average consumer needs to know that things are going to get better, that our economy is in a good place. But once again, you have to read between the lines, and you have to look at what is going on in our broader economy and how all of that connects. In the meantime, we can expect the stock market to continue to be volatile as the Federal Reserve changes its policy, as a lot of these interest rate hikes actually start hitting businesses and markets alike. Well, we're going to start seeing the stock market continue to go down. There's going to be a lot less liquidity. There's going to be a whole slew of problems because people have a lot less money. There's a lot less money circulating around, and that could continue to get more aggressive from the Fed. To be honest, the stock market is a bit miffed right now because they thought the Federal Reserve was on their side, and they thought the Federal Reserve was going to do the right things in order to get our economy back on track. Our economy is not as stable as the Federal Reserve wants you to believe. There are a lot of other problems, from consumer spending to businesses being way overvalued to pretty much all of these other markets being overvalued as well. Those are problems that the Federal Reserve isn't going to talk about, but is going to make monetary policy that affects them. And once again, I'm not saying that the Federal Reserve lied to you. I'm not saying that you shouldn't trust the Federal Reserve. I'm saying that no matter what the Federal Reserve says, you need to have a plan in place with your finances for the good times and the bad times, because there's a potential that we could be running into some extremely high inflation times, stagflation, and businesses essentially going under. And don't get me wrong, I want the Federal Reserve to be right. I want our economy to hit a soft landing in 2022, but the Federal Reserve could be wrong, and so far they have pretty much been wrong about everything related to inflation, except for that it's been caused by supply chain problems. They've been wrong about it being transitory. They've been wrong about not starting their interest rate policy earlier. They've been wrong about not pulling all of that money out of the New York Stock Exchange, and of course, printing all of this stimulus for all Americans. Now, all of that money is getting pulled away. They're basically resetting everything that happened in 2020 and in 2021. The stock market has lost all of its gains. All of this money that Americans got from 2020 to 2021 in stimulus or unemployment or whatever it may be is now completely getting eliminated by inflation and a lot of these other problems. So the Federal Reserve didn't really make an impact. at least in the long term. It was all short term, and the stock market is worried that that might happen again. So things are probably going to continue to be volatile until we have really solid financial data to go off of and economic benefits that we're going to see in the future. But that is it for me, everybody. Thank you so much for watching. And like I said, we're going to get back to our regular scheduled type content tomorrow and in the future. Sorry for being so busy. I appreciate you guys being patient with me. Be sure to leave a comment below about how you feel about all of this, whether you think the Federal Reserve lied or whether you think that they're actually going to make a huge impact with their monetary policy in the future, whether that's good or bad. Be kind out there, and I'll see you all in the next one.